So we will do past adjustment in this lecture. Past adjustment means adjustment in closed account. Sometime after accounts of the partnership firm has been closed after financial year, it is discovered that there have been some error or omission in accounts. Usually, the following types of errors or omissions are discovered when interest on capital or drawings may have been omitted, when profit and loss have been distributed among partners in wrong proportion, when profit sharing ratio has been altered with effect from some past date, when salary and commission payable to a person has been omitted. In such case, instead of altering the closed account and signed balance sheet, rectification or adjustment is made at the beginning of the next year. These error or omission may be rectified in two ways: by passing a single adjustment entry with a net effect of error and omission, and by passing the separate adjustment entry for each error. So when a single adjustment entry is passed, example number 41, A, B, C, D are equal partners. Their capital on 1st April 2023 were 50,000, 30,000, 25,000 and 15,000 respectively. After closing the accounts for the year ended 31st March 2024, it was discovered that according to the partnership deed, interest at the rate of 10% per annum on partners' capital was not provided before distribution of profit. They are omitted the interest on capital. It was agreed among partners to make the adjustment entry at the beginning of the next year rather than change of the balance sheet. So they do not change the old balance sheet. They have decided that they will pass a adjustment entry in the beginning of the next year. So pass the necessary journal entry assuming that capital are not fixed. So first of all, we will have to calculate the interest on capital of partners A, B, C and D. So interest on A's capital of rupees 50,000. 50,000 at the rate of 10%, it is equal to 5,000. Interest on B's capital 3,000, C's capital 2,500 and D's capital 1,500. Total 12,000 interest they have omitted to record in profit and loss appropriation account. So this amount of 12,000 is an item of expense for the firm, but has not been recorded to the debit side of the profit and loss account, profit and loss appropriation account of the previous year by mistake. As such, profit of the previous year will be reduced by this amount. Hence, this loss of 12,000 will be shared partners ratio in their profit sharing ratio. Therefore, each partner, because they are equal partner, if profit sharing ratio is not given in the question, then it should be equal. Then 1-1 ratio, 1:1:1 is to 1. A, B, C, D. So 12,000 we will divide among the partner 3,000 each. So we will prepare the table showing adjustment. Mean to say, in this table we will prepare 6 column particular for A, B, C, D and total. First of all, interest on capital, it should be credit to each partner. By mistake, this amount have been divided among the partner in their profit sharing ratio. So these amount we will have to taken back. So A should receive 5,000, but he received only 3,000. So we will give to A 2,000. B should receive 3,000 and he also received 3,000. So nothing is due to B. In case of C, interest of C is rupees 2,500, but he have taken 3,000. So we will take back from C 500. In same case, D, interest on capital is 1,500 and he took 3,000. So we will take back 1,500 from D. It means we will take 500 from C, 1,500 from D and we'll give to A this amount. Then entry will be C's capital account debit, D's capital account debit to A's capital account. This is the single entry. We will pass. Next question is Ananya, Bhavi, Chandni were partner in a firm with capital of rupees 3 lakh, 2 lakh or 1 lakh respectively. According to the partnership deed, Ananya and Chandni is entitled monthly salary 1,500 and Bhavi entitled salary 4,000 per annum. It is per month, it is per annum. Profit for the year ended 80,000 was divided among the partner in 332 without providing the above. Pass the necessary journal entry to rectify the above omission in the books of firm. Show your working notes clearly. So, we will prepare table showing adjustment. So, first of all, salary to be credited. For Ananya, 1,500 per month into 12, 18,000. And
Yes.
for Chandni also 18,000, 1,500 per month. Ananya and Chandni. And for Bhavi, 4,000. This amount has to be credited. But this 40,000 will divided among the partner in the ratio of 3:3:2 because we have omitted to be recorded in the debit side of the profit and loss appropriation account. So 40,000 we will divide in the ratio of 3:3:2. It means 15,000, 15,000, 10,000. Mean to say, Ananya received 15,000 but receivable 18,000. We will have to give 3,000 more to Ananya and 8,000 to Chandni. And we will take back from Bhavi 11,000 because she received 15,000 but she should receive 4,000. So entry will be Bhavi debit 11,000 to Ananya to Chandni. Next question is ABC are partner profit share. They omitted interest on capital 10% for the 3 year. In the above situation, we have completed only 1 year. In that case, in for question example number 43, the interest on capital have been omitted for 3 years. Their fixed capital account is A, B, and C. A 1 lakh, B 80,000, and C 70,000. So first of all, we will have to calculate interest on capital for 3 years. 1 lakh into 10% into 3 years, 30,000, 24,000, and 21,000. 10,000 for 1 year, and for 3 years, 30,000. 24, total 75,000 during the 3 year. They have been divided in their profit sharing ratio. In this question, profit sharing ratio is not given. I told you, if profit sharing ratio is not given, then we will divide this profit in their profit sharing ratio, in their equal ratio. So 75,000, 25, 25, 25. But they will, the amount receivable to A 30,000, 24,000, 21,000. This loss divided in the ratio of equal. So A will receive 5,000 more, B will receive, sorry, B have to return 4,000, and C have to return 4,000, and B have to return 1,000. So B is current account debit, C is current account debit, 2 A's. The main point is that because their capitals are fixed, so we will pass the entry through current account because all amount have been transferred to current account in that case. In 44 example, Ajay, Manish, Sachin were partners sharing profit and losses in the ratio of 5:3:2. Their capital 6 lakh, 8 lakh, 11 lakh. It is not given that capital is fixed or fluctuating. It means capital is fluctuating. As per the partnership deed, interest on capital, this 10% per annum for the year ended 31st March 2022, profit 2 lakh were distributed without providing interest on capital. So first of all, we will have to calculate interest on capital. In that case, profit is 2 lakh. Amount of interest is more than profit. Inadequate profit. So, first of all, we will have to give the interest in their agreed rate of interest. 60,000, 80,000, and 1 lakh 10,000. So, first of all, we will have to distribute the actual interest. As you know, if the amount of interest is more than profit amount, then we will divide the amount of interest in their profit sharing ratio. 5:3:2. Sorry, in their profit, not in profit sharing ratio, in interest on capital ratio. So their interest 2,50,000 we will divide in interest on capital ratio 6:8:11. This one. So we will divide 2 lakh in 6:8:11. 48, 64, 88. But they have omitted to charge interest on capital. So 2 lakh they have divided in their profit sharing ratio 5:3:2. Then B will be debited. A and C, Manish and Sachin will be credited. The entry will be Ajay's capital account debit to Manish to Sachin.